Hello everyone. I just want to clear up a point with regard to the triangle, the apex of a triangle, and that time projection that I often refer to. So, and I'm sure that there are other people that have this that are maybe not fully understanding it. So with regard to the triangle pattern or the diagonal pattern, we have boundaries that we establish. So we extend the boundaries of the pattern. Here is a triangle where we have A, B, C, D, and E. But the boundaries, the AC and the BD trend line, where they intersect is the apex of a triangle. So it's where the AC trend line and the BD trend line extended in time. At that point of intersection is the apex, which would be the apex of any triangle in drawing or in architecture, engineering, etc. So it's often confusing with regard to price pattern. People would think that the apex is the actual end of the pattern. So with regard to here, it's the wave E. That's the end of the pattern, but it's not the apex of the triangle. The apex of the triangle will be future in a point in time. If you are putting the boundaries of a triangle on your price action and wave E starts to trade past the apex of the triangle, i.e. the extended boundaries at that intersection, that then is a warning that that is not the correct interpretation of the price action, because we do expect the E wave to end before it reaches that apex. So that's another guideline that we can use with regard to the extended boundaries. So the extended boundaries is where they intersect, and you can see here we've dropped a vertical line, and if I just hover over the vertical line, that gives me a date in time of October the 4th. So it's on a daily time frame. And as I said, that time frame often coincides with the terminal point of the thrust from the triangle or a period of volatility. That period of volatility could be part of a still unfolding fifth wave or a C wave, i.e. the thrust from a triangle, or it could be part of the reversal. So here we see a few days after the low was in place, price action came and traded through that apex and we got a surge in volatility. So it's likely the third wave possibly unfolding, I've referred to that, or it can coincide with the completion of a pattern. It's not a rule, this doesn't happen all the time, but it's worth noting because it happens more often than not, and then it can be used as a guideline when we are trying to interpret price action or use it as something to enhance our trading. So when you're trying to list up the objectives that you require within your trading plan, which I hope every single person that ever commits to trading money in the markets has a plan, that this could be one of the scenarios where you incorporate a guideline like when price action trades close to the apex of a triangle that I'm working with, I use that then as a reason to add or take or whatever it is. But this is stuff that people should be aware of when they're creating a number of scenarios that they look for trading opportunities and trading scenarios. So here is the daily work. So when I say about a period of 1 or 2, so on a daily time frame, one period would be 1 bar and it would be 1 day in time. So you'd look for plus or minus 1 or 2 days with regard to the apex. So as we approach that time we have here, the 4th, we would be looking to be aware of there could be a period of volatility, and then when we cross it, and then for 2 days after. So going down to the 4-hour chart, then we would be looking at, here we could see where the 4th was, and you know, was within the day. Possibly the end of the wave 2, close to the end of the wave 2 scenario. And that's why it is important then when you are establishing your boundaries that you're very strict with where you put them, because that's going to affect where that apex lies.